And fun fact, today is National Chicken Wing Day.
My husband loves chicken wings.
We got to get him some today because our operation manager sends out, just kind of the update email of where everybody's loans are.
Uh-huh.
And he always does the fun fact, like today's National this day, National that day, or whatever. So
Yeah.
Today's National Chicken Wing Day. So that's good to know. All right, I'm going to turn that off.
Okay. Hey everyone, and thank you for watching. I am here with Mike Tizzano with Fairway Mortgage, and we're just going to give you guys some options. Maybe if you're looking to sell your home and want to purchase another home, we're here to give you some options on what you could do. So Mike, take it away.
Thanks, Erica. Hey, everybody. So one of the things we're running into, I'm in Arizona and Erica's in Nevada, but what couple of things we're running into in both markets is that it's really kind of hard to find houses right now. It's pretty hot seller's market, and you might be afraid to put your home on the market without having a new home identified. So wanted to give you guys a couple options here one really good option as far as being able to purchase your new home without having your other home sold. Just because I know there's some fear out there of people being afraid that they're going to be kind of in limbo and in between houses because their house is going to sell quick, right? So we want them to be able to have a place to go once that house sells. So one option that people don't really know a lot about is called a loan recast. And what that is you put a lump sum payment on your loan, and your servicer will then amortize the loan or re-amortize the loan based on the new loan amount over the remaining life of the loan. So it'll drop your payment at that point. So for example, if you are thinking, you're going to sell your house, come out with $80,000 and use that for your down payment, but because that's where you want your mortgage payment to be in the future, you can actually put less money down, secure the new house. That way you're not contingent on your offer. Come in with less money down, secure the new house. As long as you qualify, I gotta represent that with that statement. As long as you can qualify, you only need to put 5% down. So if you can have 5% put down, secure the new house, and then you don't have to worry about having your house listed and sold and being forced to move out before you're able to find the next house. And then what happens is after you move into the next house, everything's set up, your current house sells, then you can take the funds from that house and do the loan recast. Now, what I do have to mention is that not every servicer, I should say, allows for a loan recast. Now, every servicer that we work with at Fairway does, but not every servicer in the market does. So you'll want to, ask your loan officer for sure, hey, do you know if a recast is an option for me? And they should be able to direct you to a servicer that does allow for a recast.
That's a great option because not a lot of people know about that. And buying and selling a home is already a difficult process, or it could be. It doesn't have to be, but no. Doing both at the same time, you want to make sure your ducks are in a row. The more prepared a seller is, the easier the process goes.
Exactly. And like I said, the biggest thing we're running into now is I've talked to a lot of people that are afraid to list their house because they're afraid they're just not going to be able to find the next house. And so I've been able to present this option to them, and it's worked out for a couple of them. It hasn't for others. And the reason being is because you do have to qualify in the debt to income ratios on both homes. In most cases, there are some exceptions to that. And then you have to, have the funds for the down payment on the next house without having your other house sold. So for a couple of people that has worked out really well. For a couple other people, it wasn't really an option for their situation. But it's definitely something to ask your loan officer if it's a possibility. It's like, hey, can I do a non-contingent qualification up to the purchase price you want? So let's say you want to move up to a $400,000 house. What do I need to do to qualify for this before I sell this house? And that way you have that option of going out looking and securing your new home before you're forced to move out of the house you're selling. And then afterwards, you can take those additional funds, pay it down, and get into the more comfortable payment that you wanted. A recast usually takes about 2 to 3 months to complete. If you have mortgage insurance on the new loan, you'll probably have to remind them a couple times, hey, I'm also below 80% loan to value now after the recast, if you are. So please remove the mortgage insurance. If your lump sum payment doesn't bring you below 80%, you're still going to be stuck with the mortgage insurance. But if you're below 80% of the home value with the new loan after the recast, they'll remove the mortgage insurance as well. And then moving forward, your payment will be in that more comfortable range that you're expecting.
Yeah, it'll be nice just to even get that mortgage insurance off and save them a couple $100s.
Yeah, exactly. So, and so it's, I mean, it's just an option not a lot of people are aware of. And then, some options for the down payment, for example, like if you're really relying on that money from the house sale as a down payment, a lot of people don't know you can actually, take a loan against a 401k. If you've been at your job for a while, you have a nice 401k built up, you can take money from the 401k and pay it back. And you do pay interest on that, but you're paying it to yourself. So you're paying back the 401k with interest into your 401k account. So you can do that to come up with your down payment. Again, the minimum down payment is only 5%. So if you're looking to move up to a $400,000 house, you're looking at $20,000 plus closing costs. You can also do a family gift, if you have family members that can gift you the money. And then you can also, like I said, just regular savings or whatever, and then replenish that savings with the money from the sale as well. So there's options available to get that down payment and then do the recast after, so you don't have to worry. Again, I've said it a few times, but it's a big concern. I mean, I have two clients right now that have already sold their house, haven't been able to find another house. They were contingent. They couldn't qualify for the second house without selling the first one. And so now they're going to have to move that second time. So this is just a way to avoid it if you can qualify for it.
Yeah, what a great option. And those contingencies, I mean, you could still do it. There's other ways. This just kind of gives you another option of what you could do. Right now in the market here in Vegas, it is very competitive. We don't have that much inventory, so it's a great time for sellers to sell. And also another benefit is that you have these ridiculously low interest rates that are unheard of. So now people could get a bigger home and a more affordable payment. So it's just great options for sellers out there right now.
Exactly. And that's also another benefit to the recast, and I'm glad you mentioned that, is rates are very low right now. So if you were to, let's say you were to try to do this non-contingent deal, and a lot of people think, okay, now after I get my house sold, I'll have to refinance. Okay. And you don't have to. You do the recast, and it protects the rate. So if rates go up, let's say it takes a month and a half, 2 months to sell your home, rates are kind of on a yo-yo. They're stupid low, and they're going to be stupid low. But let's say now if you try to refinance, the rate's a quarter point better. Well, not, or quarter point worse. You're protected if you do the recast because your rate stays the same. It doesn't change your rate. So, that's, and the cost to do a recast is usually about $500 versus a couple grand on a refinance. So that it's a lot better to do it that way. And again, it protects the interest rate. So if you can lock in a really good interest rate on the new purchase, you don't have to worry about refinancing and hoping that the rate's still the same. It's there.
Yeah.
And you still have the option to do the refinance if the rates do go down further, if that makes the most sense. But for most people, it won't, because I don't think rates will go down. They don't have very far to go. I mean, they might a little bit, but there's not that far for them to go. So,
Right. And it's so low right now, just crazy low. So if you have any questions, I know that Mike said that he's working out in Arizona, Phoenix, Arizona. But if I have friends and family out there, so contact Mike if you're looking to like refinance or purchase a home out there. He's great to work with. And I love that he's just so educated in the market. And also will tell you things, what you could do, let you know your options. And with Fairway, they also will not only pre-approve you, they'll have an underwriter look at your documentation to get you underwritten approved. And especially if you're looking to sell your home to buy another home, you want to make sure that this is done you're going to be in a very competitive market out there. So do whatever you can to make yourself a better buyer in that market.
Absolutely. Got to have a strong offer. And then, obviously, by the end of the year, I should be good to start working out there in Vegas too. So, but yeah, if you need any help with selling real estate in Las Vegas, hit Erica up. She's the best. So.
Thank you. Thank you, Mike. Well, thank you for taking the time of giving us some options. And if you're thinking about selling your home and buying another home, give us a call. Even contact Mike if you have questions. We're here to help you.
Absolutely.
All right. Bye, guys.